CEOs and CFOs being epidemiologists. I mean, honestly, that seems like so 2020. And I don't mean to be glib about that. I really mean that. If you look at everything else that's going on around the world, hey, we haven't even talked about the surging U.S. dollar, right? And so look where the Dixie is, the U.S. dollar index. So to me, I just think there's no shortage of landmines that exist for companies like this that have been executing very well. I'll just make another point. We sat on this desk a couple weeks ago when Tesla reported an amazing quarter. And we had probably Gene Munster saying, amazing quarter. This morning, that stock was down 25% from the highs that day when we were talking about it in the aftermarket. That's $250 billion in market cap. So to think because this stock is so precious and this company executed so well in such a difficult environment that it can't go down is silly. I'm not wishing it down. That's just the way it is. And when you look at these two companies that we have that report in the aftermarket, let's pull up a chart of the NDX. Tim just mentioned the QQQ. Look at that thing going back to 1 year. It is sitting right on this $13,000 level, man. And if these two stocks were to go down and Facebook were to fill in that gap, right, and Google were to start going back down again, and Microsoft gives some of that back, we're going lower. It's just that simple. And listen, it's not I don't know, it's not an indictment of anything other than the fact that we don't have a whole heck of a lot of uncertainty. These are some of the biggest companies in the world, and they are dealing with situations that they have not dealt with in a very long time.
We get added a lot on Twitter for being so incredibly negative. We're talking about forces that are bigger than the individual companies, as Dan had been mentioning. You can execute very well, and your stock can still get taken down. Gene Munster, you're out there. You said Apple had an extraordinary quarter, but what do you make of this guidance?
Flabbergasted.
Well, we can try and read his lips, or we can try and go back to him at some point later on. But, Bonawyn, would you agree in terms of the landmines? Oh, wait, hold on. Oh, he's back. Gene.
I'm back. Yes, Melissa, I'm back. The biggest takeaway was related to the supply headwind, $4 to $8 billion. That was a bigger headwind than what we had in the March quarter. And the reason why that's significant is, of course, Apple is among pretty much every company that's dealing with these supply issues. But what this does, I think, is it creates some anxiety for investors going into next quarter. If you were going to put all these numbers together, the $4 to $8 billion impact, and look at where street guidance is, just to put some context on this, they basically are guiding to about $83 billion in revenue for the June quarter. The street was at $87 billion when you put all the factors together. And I think just that reality, I think, does impact the near term how this stock can perform, just like any company. Ultimately, these are transitional issues that they're going through. And at what point we get through these supply constraints, my best guess is probably sometime early next year. And so to answer your question, Melissa, what's the impact been? I think that the supply piece is noteworthy. It's noteworthy because it's come up on each of the last 4 calls, and it's going to probably be in the back of investors' minds. Again, it doesn't change my confidence. I think this is a $250 stock in a year from now. Call me out of touch with reality, but I think what they're going to get into, this company will bounce back, bounce higher in the future. But this supply topic is something that is taking the headlines for the quarter.
The expected hit to revenue, Gene, just to be clear, is from supply chain constraints, according to Tim Cook, according to the CFO as well. I'm wondering, have they mentioned anything about demand in China and whether they are seeing demand soften because of all the lockdowns?
Record quarter in China. It grew at 4%. It grew at 21%.
But for the current quarter.
For the current quarter. No, they're basically saying that the demand continues to be great. However, that they just can't keep up with supply. So that is ultimately people want their products. It's so to answer your question is the demand equation seems great. The supply piece is essentially the boogeyman that I think is going to be some concern. And ultimately, they're going to get through the supply issues. Having products that are revered around the world, having those, that's the difficult part. Mm-hmm. And ultimately, they'll get this right on the supply side.
This is the biggest of the big cap tech, Bonawyn. And so when you hear Gene Munster say these supply chain issues will probably last through the beginning of next year.
Awesome. Thank you.
You wonder what the impact is on other companies that may not have the size or heft to navigate.
Took the words out of my mouth. I mean, as I mentioned before, Apple is somewhat of a barometer of health of the general sector and the general market as of recent history. if they are having headwinds in this regard, I can't begin to imagine what the follow-through is for other companies that don't have the pricing power, that don't have this, the vertically integrated supply chain, that don't have pricing power, that aren't first in line for these, supply inputs. So I just think the overall setup, and again, I don't want to jump on the bandwagon of being more negative. I'll smile and say, listen, great quarter, but our job here is to kind of get up here and give you the macroeconomic picture, ability for companies on a microeconomic to execute, and whether or not that setup bodes well for you to execute within the constraints of the general economy and the general market. What we're saying here is that despite the fact that they've been able to deliver, and despite the fact that they are a leading candidate and are able to navigate in ways that others don't, the follow-through or the lack of follow-through, despite what they've just given us, doesn't bode well. That setup makes it very difficult. So regardless of ability to execute, you've got to take those other geopolitical and macro, economic factors, into consideration when you're deploying capital. I think that's really the point that we're trying to make here.